It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. Joining me today again is smartest guy in the room, Michael Becker.
Hey, Paul.
So Michael, who owns over 5,000 doors, is that right, Michael?
Yeah, we've done over 5,000 doors.
And has about $100 million worth of investors' money. How do you sleep at night, my friend?
Like a baby.
That's good. So he is an apartment investor, former banker for one of the largest banks in the United States, and decided to jump over the fence and actually, instead of loaning money, owning property. So I think he did the right thing.
Yeah, it's been an amazing run, about 5 years now, and we've done over 5,000 units and $500 million in transactions. It's unbelievable that I wouldn't have thought that we've been as successful in the marketplace as we've been. It's been a great run.
That's good for you guys. So tell us a little bit about what we're going to hear. This is the second part of a two-part podcast on listing panels from the Old Capital Multifamily Conference on October the 5th. And Michael, who was the speaker and
moderated the panel,
was asked a number of questions. So talk a little bit about what you talked about.
Yeah, last week you guys heard the first part of the same listing broker panel that I moderated at the Old Capital Conference a few weeks back. I thought it turned out great. So we talked a little bit more in depth about one subject matter with each panelist on the last podcast. This one's a little bit more of the Q&A, kind of opened up to both the audience as well as some of the questions that I had. And you also hear James Ng here, who was the guy who really was an unsung hero of the Old Capital Conference. He put the whole thing on and really did a lot of the work. So he asked some questions from the audience. So I thought it was great. Again, I referenced it last week. These guys and their firms probably control about 70% of the deal flow in DFW, probably approaching nearly $2 billion in transactions annually. So these guys are the guys that know what is going on in town. So whether you're in Dallas or anywhere else, there's a lot of good knowledge that you guys can take from these guys and apply it to how you're going out and interacting with brokers and try to put these deals together. Wealth of knowledge up there. Yeah,
that conference, we had about 475 people. So just in your mind's eye, think about all these people up on stage and Michael moderating that, and then a lot of great questions that came out of the audience. So let's listen to that in just a second. If somebody wanted to find out a little bit more about what you do, Michael, what's the best way for them to get in contact with you?
Yeah, really just the easiest way is to go to our company's website, which is www.spiadvisory.com. There's a contact us page on there. Just fill out your information and shoot us a quick note. And happy to potentially hop on a quick call with somebody and get to know the people on the podcast.
That's great. So thanks for moderating the panel, Michael. We look forward to listening to some of the questions from the audience, and let's listen right now.
So I'll kind of just open it up to general panel here now. So we've obviously been in an up market for many years. As Mike mentioned and Nick reiterated, this is probably the best market any of us has ever seen in our professional career. It's just been going and going and going. A lot of good, strong fundamentals. But what do you guys kind of see as like the state of the market now, and how do you see going forward? Rental rate, cap rate growth. What are you guys seeing? 1-2 years, going forward. Anybody wants to jump in?
So, state of the market. I would say this. Of course, we may be in the fourth quarter, as it was earlier mentioned, but if you think about it, all the components that make up a good market, the balance between supply and demand, the job growth, rent growth, all the corporate relocations to Dallas, low interest rates, tons of equity, all the components are still there. I don't have a crystal ball, but for the next 12, 24 months, I think we'll see more of the same. In terms of cap rates, everybody talks about cap rates, I understand it. Of course, it's possible that cap rates could continue to get compressed. But I would tend to think that cap rates are going to follow long-term interest rates. So now who knows how to predict that?
At all these conferences, that's a question that everybody asks and wants to know. So where are we? But I mean, when you sit and really think about it, we're adding a new suburb every year. And, when we get Amazon here, next year, to go with State Farm and Toyota and all the other companies that keep wanting to relocate here. You look at the economy and this is not artificial. What's happening here and the fundamentals here, there's nothing about what's happening that can't be sustained. As Chris was showing on his slide, the delta between new construction and Class B and Class C is there. So, and we're talking cap rates, but I don't know how many of our deals are really even it used to be, well, hey, what's the cap rate? Okay, that's the price. But I mean, so many of these deals are value add deals in some way, shape, or form that, cap rate, if it's a truly stabilized deal, that's definitely going to come into play at some point. But ultimately, I mean, if you guys are looking at adding value and growing rents $100, $200, whatever the plan is, I just don't see any reason why we can't sustain that growth moving forward. I'm very optimistic over the next couple of years it's going to be more of the same. And until I see something happening different in Dallas-Fort Worth than what is happening right now, I don't see it slowing down that much, honestly.
You heard it from Nick. Don't pay attention to cap rates, right?
We're getting Amazon and ignore cap rates.
Don't matter. That's good.
I'll chime in. I heard Steve Brown speak this last February. He writes the real estate section of the Dallas Morning News, and it was at a breakfast, and somebody was complaining about up in Frisco, the traffic on the toll road and 121, and oh my gosh, all the construction. I count 15 cranes up there, and the Dallas Star and Toyota, and Steve Brown said, look, in that little spot, right where 121 and the toll road interact, there's going to be 15,000 new jobs. Almost all of them primarily white-collar jobs. So you're going to have 15,000 new cars, and that's just the jobs. You're going to have families, mothers, kids at schools, all that kind of stuff. And we're sitting there, and he's like, okay, get to your point. He says, I'm telling you right now, this traffic thing, get over it. It's here to stay. So he kind of said Dallas is like a teenager. We're morphing into a very large, mature city that's going to be competing with the Los Angeleses and the New Yorks, and that's just how it is. And a lot of people, especially Fortune 500 companies, they're well established. They're moving here. We're not just having, like Nick said, artificial growth. This is well established, continual over the next multiple decades kind of growth.
So we've talked a lot about DFW. I know Nick's team and ARA over there, so maybe, Jacob, you can take this one. You guys have secondary market teams. What do you guys think of the secondary markets of Texas? Is there anyone in particular that you guys like? I know, Mike, you also sold a deal with Shaw Falls, but maybe, Jacob, you want to take it. Any particular secondary markets you guys see that are bullish at ARA?
So we, in our shop, we have a secondary team that's specializing in the secondary markets, and we work together with buyers and sellers that are kind of moving back and forth. And we do see people seeking out in the Metroplex for obvious reasons. It's getting more expensive here, and you're going to other markets where you are seeing where you're getting more for your dollars. You're getting higher cap rates. Some of the markets that have been more of a roller coaster, if you take the Midland Odessas, they are tied into oil. They have been shut down lately, basically by lenders. Not saying that it's a bad market. It's a question of when you're buying in. And now what we're seeing, and we have a deal out there right now, that we're actually seeing that because it's cheap to get oil out of there, it's cheaper than North Dakota and a lot of other places. The oil firms, they're gearing up, and that's probably the closest we have to here in Texas, where you really have a recovering market where you're starting more from the bottom. So we are starting to see more interest out in the West Texas. When we get a little closer to Dallas, we had the 3-pack in Lubbock. That's a college town, well-working, more diversified economy, and get a lot of attention out there. And again, you're getting, if you're looking at 5.5 cap here, you're looking more like a 625, 650 out there, and that's enticing. So we're working with a lot of folks moving out, and especially if they can get the unit count to make sense out of it.
Anyone else have anything to add on the secondary, tertiary market?
I would just echo what Jacob said. I mean, I think we have 4 deals in Midland, Odessa right now that just hit the market. So I think there's a huge opportunity in that market. The timing is right for that market. And, if you start studying what's going on out there, there's a big opportunity. And the timing there, I think, is very good right now. I just think it's a great opportunity for yield. And for the most part, you can get equally attractive financing in most of these markets, unless a couple of them are pre-review markets. But, we've done deals in Temple and Waco and Amarillo and Lubbock and College Station and in East Texas, Tyler, Longview. I mean, you're like you said, 75 basis point difference in cap rates. And here's the other thing is, in those markets, most of those properties aren't on the faux wood flooring, fixtures, countertops, appliances plan. I mean, that's not a thing in a lot of these markets. And so not only can you just buy it just as is at a higher cap rate or in a lower price per pound, but to add value, I mean, there's more opportunity. It's harder and harder to buy in Dallas because the previous owners likely added value. Maybe you're continuing on with what they've done, but in those markets, you can go out and start from scratch. And I can say this, I've never not seen it work. People will pay more if you give them something nicer. I mean, to some level. And maybe where you'd get 100 in Dallas, you're getting 50 out there, but the math still works. So I just think there's a really, really excellent opportunity there. Evan and Sean are sitting right here in the middle of the room, and they are our secondary markets guys. And I know they'd love to talk to anybody about it, but I mean, we're doing a lot of those deals right now, and they're getting a lot of interest.
So we've talked a little bit about this on one of the previous questions, but a lot of people in here are either aspiring apartment owners or maybe have done one deal. Maybe you guys could provide some advice from a broker's perspective. What are some of the things that the better buyer groups out there do, how they interact with you and how they tour deals? And maybe on the flip side, what are some of the things that you absolutely hate and that puts you off immediately when you encounter this person, and when they call or email you, you immediately want to delete or go to voicemail. So maybe just kind of throw that out there. This is stuff that you could take whether you're in DSW or any of the markets. So I don't know who wants to start. Al, maybe you want to start, Al?
Yeah, sure. I'll throw something out there. I mean, I think back to what I was mentioning earlier about some of the intangible things. Some things are it's very hard to win a deal. Some of the things you can do to set yourself apart are very, very easy to do. And in a very competitive market, it's the little things that matter the most, because that's how you're setting yourself apart. So things like when you go to a property tour, we love touring properties. It helps bring more exposure to the listing. It helps bring more offers to the table. It makes the brokers look really good to the sellers, which is wonderful. But it also pays for the buyer and for the broker and for the seller. It pays for everybody. If the buyer reads the OM, does the underwriting, looks into the deal, and they show up at the property tour and they're in a position where they can ask educated questions, intelligent questions. They've already kind of understood the high level of what the opportunity is. And I think, having a very productive property tour, that good feeling gets communicated to the seller along with the offer. So having a property tour, being prepared for it, and asking good questions is a good first step to winning a deal.
Anybody else? Mike?
Well, the only thing that I would add, I think the message has been consistent. Buyers have to do their homeworks. I would say that quick answers is way up there at the top of the list. Time is very important to brokers. That's all they've got. If you've ever heard the term a quick no, that means a lot. I mean, it really does. Probably the worst thing is to get engaged in a deal and then go dark, what we call going dark, and you're hard to get in touch with, and you get moved down the list pretty quick on that one.
I'd like to just chime in some of the basic stuff. You guys just sitting here and coming to this conference, I mean, I know it's not free. I mean, that shows some effort. And I would say, little things like being consistent, not being like a nuisance, but, I think we get phone calls from almost internationally. Hey, Chris, I live in Seattle, never been down to Dallas before, but if you can find me that off-market value add 8 or 9 cap, I'm your man. And we go, okay, thanks, bye. And so you guys just sitting here, and then just a couple of observations. I'm sure we've all been on showings and stuff where they show up and they have nothing in their hands. And you can tell they're just kind of going through the motions. They just want to touch and feel the property, but they're not taking notes. They're not drilling into questions. They're not doing that. Just showing up with, pen and paper. There's all sorts of different buyers out there, but just minor things like that, I think, go a long way. And then I'll just be blunt, and I think it's chiming into what Mike says, when somebody goes dark. A quick no is great, but if we get down the road, Boy Scouts 101, just don't lie. That seems very simple, but, in real estate, everybody goes through, we're on a team together. There's so many people involved, and so somebody's going to uncover whatever concerns or issues there are, whether it be a lending issue or an equity issue, liquidity issue, things like that. So, just minor things like that, I would chime in.
Yeah, I would just add, number one, we like touring deals, and we like to do the property tours ourselves. So it gives us a better chance to know you guys. And I can't tell you how many deals, when somebody actually goes out and physically tours the property, all of a sudden they start seeing value in ways that they didn't see it just on a piece of paper. So that's valuable. You're saying, hey, how do I get to know you better? How do I get in the queue to hopefully get an off-market opportunity? let's go look at deals together, and show me, that you've dug into the package, and it's okay if it's not your deal. But by the way, that also helps us know why it's not your deal and what might be your deal. So I think everything they just said is dead on, but don't be too quick to eliminate a deal. I mean, if it looks interesting, maybe I'm not quite getting there, but I walk the property and wow, look at this big common area back here. Oh, you could add washer dryer hookups in this part of the unit, or I didn't realize this was right next door to this property that's getting $300 higher rents, or whatever. You never know what you're going to find on a deal, but I will say it happens all the time, and generally whoever wins the deal has found something that maybe somebody else didn't find. So I think there's a big value in going through the deal, going through the underwriting, and for us to know why it's not your deal, so maybe we can find the one that is your deal.
Jacob?
Well, while we're on the soapbox here, I will take the opportunity to. I would make all this stuff the other guys have said. I think one thing, if you go in with the mindset, I'm going to beat the market and I'm going to get a better deal than anyone else, you're not going to get any deal. And that's just the facts. Again, like Chris said, you get the guy that's just looking for that 9 cap in a 5 cap market. It's not going to happen. So we might as well stop that conversation there. I think it's about being realistic of what you can do, what you're trying to do, and be committed to that. So if you're into value add, heavy value add, and you're looking at deals that's got heavy value add components, well, when you go out and we're touring, you need to be realistic about what you're seeing, and again, have that kind of positive mentality of evaluating the deal and solutions to an old roof, or if it's foundation issues or whatnot. We're not here to try to sell you something that's not there. We're trying to work with you, educate you on what we know, and get you the best chance of getting that deal.
Perfect. So I'm going to turn over to James here in a minute for Q&A next. But one of the things that I want to make sure you guys all do today is network. So we have, over probably $2 billion in annual transactions on these guys' firms represent. That's a lot. And we're one of the largest markets, and these are the players in the market that sell deals that you guys want to buy. So make sure at breaks, at lunch, go get these guys' business cards, get on their list, have a face, have a name. That's what I've heard, that those are the little things that make the difference between successful buyers and unsuccessful buyers. And starting that relationship today is a good point to start if you don't know any of these guys up here. So I want to make sure you guys do that on a break. So James, do you have any questions for the group?
Sure, we got a couple questions here that came in. Jack Langenberg asked, what makes buyers successful when buying at or near the peak of the market? So what have you guys seen in the past 10, 15 years? If someone bought in 07, how did they ride that out?
I'll take that one. I think you have to have a long-term view. I mean, you can't convince yourself, as Jacob just said, that you're going to get the same deal that somebody got in 2012. 2012, there was a lot more uncertainty out there in the world than there is today when it comes to growth and belief in this market. You have to understand the story of Dallas-Fort Worth if you want to be a successful buyer, and that is that we're not in a cycle. I mean, we are in a cycle. We're always in a cycle. Where we are is anybody's guess, but the point is, in the long term, it doesn't matter, because we are not in a cycle here. We're in a secular generational growth story. We're catching up with the coastal markets and the other, kind of what they call gateway markets in DFW. And if you don't believe that story, it's going to be very hard to be successful, because all these figures you see up here on all these slides, they aren't conjured out of thin air. They're real figures. It's real growth that didn't exist in 07 at the last peak of the market. And so you're actually fortunate to be buying at the peak of this cycle versus the peak of the last cycle, I think. And so if you go in with that mentality and just understand see the forest for the trees, just the broader context of where we are and how we're developing as a Metroplex and as a market, I think that'll make you very successful going forward. Don't worry about pinching pennies to get dollars, or whatever that saying is. So.
Well, I would also note that if you bought at the peak of the last cycle and you still own that asset today, you look like a genius. If you bought at the peak of the cycle before that and you still owned in the last cycle, you look like a genius. I mean, values go up over time. So if you don't have the right debt or you don't have the right equity to be able to ride out a potential downturn, then that's when people get in trouble. If you don't have the right management company, or you don't have the right pieces. But inflation is going to occur and values are going to go up, and someday these deals that are being built today for $150,000, $200,000 a door are going to be C deals. And they're going to be worth more than what they're worth today is new deals. Just like if you went back and looked at new construction 30 years ago, it's worth a lot more today as a Class C building than it was back then. So, I know there's always some hesitancy to buy at the peak of the market, if we're even at the peak of the market. But with the right debt, which is really better than ever right now too, not just in terms of rates, but also in terms of flexible prepay, declining prepay, some of the floating rate debt products, et cetera, out there. There's a lot of flexibility. So just match your debt to what your strategy is or your risk tolerance is, and you should be fine. This isn't a market built on bad fundamentals. So I feel, very, very confident in a 10-year, 20-year outlook, as Chris was talking about. I mean, this is going to be one of the major markets in the country. It already is a major market, but it's going to take the next step, and we're seeing it right before our eyes right now.
Okay, the next question came from Bonnie. She said, Bonnie Staples, any tips to be prepared for an interview with a seller? What is going to give us an advantage? Any suggestions on who else is on the call besides the buyer?
Jake, you want to take this one?
Sure. Be prepared. Have your budget ready. Have ready to describe what you have seen, details of the asset. I think a lot of sellers, they like to see if you have a contingency plan on if there's value add involved, and you can dissect that down to real numbers and what your plan is. The more you can map out, the more certainty you're going to create for that seller, and that's going to help. When it comes to who you're going to bring, it's not a bad thing to have, I think, a lender on it, if it's appropriate, maybe for a part of the call, for that part. I think it's fine to ask the broker that's setting it up, would this be appropriate? And have that open discussion again to know what way to go. Again, we're here to help you, to prepare you, and present you ultimately to the seller. So have that open dialogue with the broker.
All right, we're going to wrap up with just the last question here. If you guys could provide just sort of one piece of advice, and then if you're going to have anything tomorrow at your office or anything like that, just let the audience know some of those details. Nick, you want to kick it off and then just go to...
So first of all, we are going to have an open house in our office tomorrow from 9 to 11. You don't need to RSVP. We're at Spring Valley and the Tollway. I know ARA is doing the same thing. We're right across the street from their office, so we'd love to have anybody stop in and say hello. Our team's going to be there, and we'd love to get to know some of you guys, put a face to the name. I think there's been plenty of advice on the panel. I mean, I just think preparation is everything. I mean, relationships are everything. So start today, and we'd love to start building those. There's a lot of faces I see out here right now that we've closed deals with, and we like our clients. We want to know our clients. We want our clients to like us. We enjoy doing business with people that we like. So we want to make it a great experience for you guys, and we hope to get the same in return for all the parties that are involved. So look forward to meeting some folks tomorrow and throughout the rest of the day. So.
My piece of advice would be, as real estate is dynamic, it's always changing, it's always adjusting, is to continue networking and educating, obviously in talking with brokers, mortgage brokers, among yourselves, all that stuff. I think that's very important, because everybody's crystal ball is pretty much all the time pretty clouded. So any advice, any networking, hey, what are you doing over here? What success have you had over in this submarket? Hey, what are you doing in the kitchens? I mean, getting down to that granular level, all that is just an ongoing fluid type of environment. So networking and keeping in touch with other owners, other investors, other buyers, sellers, I think that's very important.
So here's my advice. Nobody's going to be able to predict the top of the market or the bottom of the market. Nobody's ever been able to do that. You don't have to sell at the top or buy at the bottom to make money in this market. Right now is a great market. Everybody who's bought in the last couple of years, probably what they were thinking, wow, I wonder if I've overpaid. Now, what do you think they're thinking today? They've made a lot of money, and that's where we are. This is a really good market. Having said that, we also have an open house tomorrow, 8:30 to 10:30. Our office is right here, Preston and Beltline, real close. Would love to have you come by and talk about some deals.
Well, for advice, I think we've covered a lot today, but what I like to tell folks is be patient, be prepared, and be resilient. So you have to have patience to look at a lot of deals. You have to be prepared in terms of analyzing those deals and communicating with brokers and communicating with your partners in the business, and being resilient as well, because even if you're patient and you're prepared, You're not going to win every deal. You're not going to win 80, 70% of your deals in this market. It takes a lot of at-bats to get a deal, and so you have to have that resilience and keep pressing forward and learn something new from every setback or every deal you don't get. And that, patience, persistence, resilience, I think that's really important here. We don't have a formal event tomorrow. We're in Fort Worth. Anybody who wants to stop by the office, of course, we're going to be there all day, and so just give us a call, and you're more than welcome to come by, and we'll be around. And really appreciate you all having us.
I would mimic what Al just said, be patient, and I would add that to stay informed, like Chris said, create all the reference points you possibly can, come to these things, get feedback, understand where rent growth are going. It's going to be important for you to be able to compete on these deals and feel good about it. So continue to educate yourself and stay in tune with the market. As of tomorrow, we're also going to have, like Nick, down Spring Valley and the Toll Road between 9 and 11. Open house. Feel free to come by, stop by, and meet the team. And actually, for this occasion here, we've been saving one deal. We're going to be launching, and hopefully we'll be launching tomorrow, so we'll be ready to talk about it.
So I think the moral story, I want to thank everyone for taking your time out of your busy schedules to come up here. Again, I'll reiterate, these guys do over $2 billion in transactions out of their office. That's the majority of the market share of B&C product in DFW is on the stage right now. They do a ton of it. You should get to know these guys. So we definitely want to thank you all for your time today.
Thank you.